is to double our balance sheet once in 3 years. If you look at what we did in 2011, we had a 34% growth in our balance sheet, and we believe that this is sustainable. We believe size matters. In an industry, in a country like Nigeria that is growing, the ability of lenders to be able to support big businesses is quite important. Nigeria is still a country that is still at the elementary stage of development, and the banking sector has a big role to play. And that's where the issue of size matters in your ability to be able to support big businesses. I don't think we should confine ourselves to a situation in which Nigerian banks are not able to lend big volumes of money to big businesses, and also to be able to lend longer than we presently do. And so that's why we believe size matters. What's also wrong, however, is to grow inefficiently. And that's why we need to balance that growth with efficiency. And that's why we anchor our strategic objectives into 2012 and 2013 as growth and modernization. So that as you grow, you also become more efficient in your services.
All right, I want to touch on your outlook for interest rates. Clearly last year was a high interest rate environment. Some think that we may begin to see some moderation. What's your expectation, and to what extent do you think that might impact on your margins, which of course have been very good in the first quarter?
I think the imbalance in the interest rate regime has been corrected. We now have a positive interest rate regime, which was what the central bank had always wanted to do. You have an interest rate regime today that is above inflation rate, which is quite positive. I believe that this trend will remain stable as it is today, and I don't think I expect any major surprise or any change or shift in government policy. So I see a stable interest rate regime.
Your first quarter numbers were, of course, very well received by the market. We've seen your share price move about 20% since your full year result was announced, and of course, we've seen that trend sustained recently. ROE guidance, what are you guiding for 2012? In the first quarter, we've seen you report 27%. Can we see that sustained for the rest of the year?
We are delighted. We had 13% post-tax return on equity in 2011. We are guiding on 15 to 18% for 2012. We achieved the 27% in 2012, but it's still nice that we retain our guidance at 15 to 18% post-tax return. If we're able to surpass that, it's bonus. But I think at this stage, we don't want to change our guidance number. We still believe that 15 to 18% clearly is achievable. If we do better than that, of course, we'll report it, and that will be bonus.